And the Taiwanese index is down 0.3%. Hero Motocorp August sales were below what the street was expecting, coming in at 4.62 lakhs, while Nomura's estimate was 4.8 lakhs.
What I'm going to give you today is a bit of a range. Yesterday's low and high, 17,450 to 17,700.
India's multiples are high, and we maintained that for a while, that this has historically been high.
13 players, including marquee ones like CPPIB, NIF, Petronas, Brookfield, ArcelorMittal, have expressed interest in acquiring a minority stake in NTPC Green.
The Nifty is up 62 points now, and the mid-cap index also opening firm.
We haven't seen much downgrade to earnings after the first quarter numbers.
The Nifty will include Adani Enterprises with effect from September 30th, and making way for that would be Shree Cements, which would be excluded.
CV industry per se is doing very well, and we are expecting good growth overall for the year.
Lakshman Narasimhan has now been appointed the CEO of Starbucks Global.
We have Nifty sitting with gains of 50 points.
Good afternoon and welcome to Closing Bell. I'm Anuj, with me Prashant and Rima, and we are starting the last hour of this week. It's been a truncated week. The markets made so many intraday moves, so many positional moves, but overall the jury is still out on whether the markets made a trending move or not. What the market's done today is respected the boundaries. We discussed in the morning as well. Normally after expiry day you have an inside day, which is that previous day's high and low both are respected, and that's what the market's done both on the Nifty. The Bank Nifty is showing some signs of life in the last hour, so it will be interesting to see if that can sort of carry the bulls towards the line. The other interesting thing is that, like Prashant told us in the morning, Monday US market is closed. Now, normally, in India, you try to get a bit adventurous whenever there's a US holiday, because you know that there's at least not going to be too many negative cues that you're going to be faced with. So whether that leads us to some last hour flourish or not, we'll find out. But for now, it's been a good day. From the lows, there's been a decent recovery. Guys, hi, good afternoon.
Hi. Afternoon, guys. I mean, absolutely. It's been pretty solid, right, from the lows of the day. 60 points, and I think if we kind of continue all the way like this into the close, I think it's going to be a pretty good outcome. The truncated week, I mean, and by the way, if we are up 60 by close, it's going to be an up week once again. By nothing much, by about 0.25%. So 40, 50 points, but even then, the weekly bar will turn positive. So that's something to watch out for. Later today here, not here, but in the US, we get the jobs report for the month of August in the US, and I think that'll be the big one. So Monday is a holiday, and then we get the CPI number on the 13th of September. I'm just telling you the road all the way into the September FOMC, which of course is what global markets are fixated on. But so far so good. Things are looking pretty good, and I think broadly speaking, markets here continue to defy what is happening elsewhere around the world in the US and other markets as well. Rima, hi.
Hi, Prashant. So all eyes are going to be on the jobs data. It comes out at 6:30 p.m. India time. And right now, at least, the street is divided on whether the September rate hike by the Fed will be a 50 or a 75 basis point. So that debate is still open and alive. And this data point, as Prashant pointed out, today's jobs data as well as 13th inflation print will be very crucial as an input. If it's a strong one, perhaps there is a case that, we could get a 75 basis points rate hike. But if the labor market shows signs of some moderation, then maybe the Fed could consider easing up a bit on the aggressive rate hike pedal, and we could have a 50 basis points rate hike. But of course, that depends. For the week, it's a 0.25% gain on the index, but mid-caps have performed a lot better. The mid-cap index is currently up 1.6%. That's the gain that it's tracking for the week. And in the last 1 hour, we've seen the auto stocks give up a bit of their gains. So the Nifty Auto Index has pretty much flattened out. It was the big Nifty gainer, but right now the Nifty Auto Index is quite flat, and it's been selling off for the last 2 or 3 hours. We'll discuss all these trends in greater detail. Let's tell you what we've lined up for you in the show today, the last closing bell of the week. Autos remain the flavor of the day on the back of the August sales. Key trends, excerpts from our chat with the managements of Eicher Motors, Bajaj, Maruti coming up on the show. Adani Enterprises clocking in big gains after the stock replaces Shree Cement in the Nifty. Analysis on the stock lined up on the show. Meanwhile, GMR Infra, another big gainer in trade today. We'll tell you what's leading that stock higher. And Abhiram Elaswarapu of BNP Paribas will join in to take the discussion forward on the markets and the way forward.
Okay, but first up, as always, we start the show with last hour calls. We have Mitesh Thakkar now joining us for that. Mitesh, hi, good afternoon. It's been a very two-sided moves kind of market, but largely up. Your thoughts on how the index is placed now, and what would be your individual stock calls?
Yeah, Anuj, I think, today if you look at the low, I think it was very close to that 20-day average area. I think that 17,440 was the 443, 444 was the low, and I think 17,425, 430 is the 20-day exponential average. So I think that level is still coming into play. But I think, after that big rally which happened throughout the month of July and then, towards the first half of August, I think the market is yet settling down at higher levels. So my sense is that I think, we'll see more of consolidation happening. Even if the 20-day average breaks, I think we're not looking at levels below 17,200, 17,150 zone. So it's broadly a market which is settling down at higher levels, which is not a bad thing in the medium-term chart perspective. But in the short term, I think it will be choppy and it will be difficult to trade on the index. So avoid that. On the stock side, ITC has made a fresh swing high. So that's a buy with the stop just below 318 for targets of 335. And other is a mid-cap stock, and mid-caps have been doing well today. And in fact, last couple of days, they've kind of, tried to catch up for the underperformance. India Mart is breaking out big time. That's a buy with a stop below 47.50 for targets of 5,000.
Okay, all right. Thanks very much. Good speaking with you, and we'll have you back in a bit from now for more, Mitesh. So that Mitesh is trading ideas as well. Prakash Diwan is joining us now. The market, by the way, is slipped 20 points or so from the time that we started. So just about 38 points left now from being up about 60, 65. There you go. There's a bit of a turn down, which seems to have taken place. But nothing major. It's been like that since the morning. Prakash, hi. Thanks very much for joining in. Afternoon. Just a broad question on what you're making of things, what you're making of the market. Lots of newer names coming into action, Prakash. I'm looking at something like Astral, which is jumping up 6%. Action Construction Equipment, the cranes maker, that's up 10%. I mean, that's a big one. And many others. Your thoughts on the texture, the color of the move that we have?
Good afternoon, Prashant. So I agree, the newer names that you see coming to life on the screen is probably a manifestation of that FOMO effect. We've seen markets have kind of come back from every dip, have been bought into ferociously. And now what's happening is that while the FI money comes back through the ETFs to chase large caps, the retail activity and the unallocated capital that's still probably lying with some of the PMS is finding its way into names which haven't yet participated in the rally in the last few months. And that's precisely where you see a lot of that action coming back. But importantly, there is an acceptance of certain newer sectors that look like which are likely to participate going ahead. So construction material is one. I mean, we saw the kind of strong move in cement, but that's kind of now percolating to other areas as well. And I'm sure the crane industry is something which will also see a huge rub-off from the headwinds that you could get from new order booking on infrastructure projects and construction. So I think it's acceptance of defense, acceptance of electronics, all of those things as newer sectors to bank on, to allocate money to, which is the texture of the market right now. So you may see a little bit of money coming off the earlier names, the power utilities, or probably the steel names. So there is a sector rotation that's clearly underway. And that's why while you don't have advanced decline ratios, which are very dramatically positive, but there's still a lot of activity on the indices, especially the small cap, mid cap indices at this point in time.
Talking about new names which are popping up on both the price as well as the volume charts. Take a look at India Mart. It was a forgotten stock. The stock was down 50% from its 52-week high. Earnings have not been great. But right now, India Mart is, just surged close to about 7 to 8%. Very large volumes. Volumes are nearly 3 times the kind of volumes you typically have, on a daily basis. Just Dial 2 has had a good trading session. That's up close to about 3%. Media has clearly been the sector of the week with the news flow surrounding it. Sun TV is now up 4%, 5% now. Z Entertainment has made a last hour up move as well. Prakash, India Mart, Just Dial, forgotten stocks, but considering that they're about 40-50% away from its, from their all-time high levels, And is it time to start looking at that?
So, Rima, selectively these new names or either to ignored names probably will see some sort of semblance of buying for people who are probably averaging out, having bought at higher levels. You probably start seeing a turnaround in the business itself. And what's going to happen is that right now the first round of buying usually takes place from more the smarter investors who anticipate some sort of a change in trajectory in terms of the growth of the business itself. But then it'll probably be followed by the PE re-rating with more demand coming in. And I can tell you the way people have started talking about Zomato so positively, or for delivery, which seemed expensive at the time of the IPO. Everything is kind of changing so quickly. I mean, I never anticipated the mood to change towards outlook to change towards some of these new age businesses, but they are disruptive. They really don't need to kind of take too long, and a gradual change. It could be fairly swift and fairly dramatic. So that's what people are banking on. But I still believe if you're looking for value, there is still lots available in sectors that have not yet participated, as I was saying to Prashant's question, and that's where you would probably need to focus on. You could take a little bit of allocation in the portfolio, maybe a 2, 3, 4%, but you really can't bite into these new names. I mean, the likes of Just Dial and India Mart in a very significant way. So they're more like tracking positions, as they call it in trading parlance, but otherwise not something very significant is what I would assume.
Okay, so, well, just look at some more names. Prakash, afternoon. What have you made of this move in Astral? One of the recent F&O inclusions, of course, marquee name, but any thoughts here?
So good afternoon, Anuj. So what's happening is that Astral had very decent numbers and everything, but the PE multiple has been absolutely out of whack in terms of anything close to reasonable, right? The valuations have been almost like 8-10 times of Phenolix, which is also into that same business. But I think the key acceptance of the market in from the moves that we see now in Astral is that the market is accepting that it's no more a pipe manufacturer. It's no more a solution provider for a very small niche or a segment. And the kind of appetite that people would have for this is largely dependent on the kind of new acquisitions that they've made. They've got into a lot of newer businesses which will start paying off probably from early to 2024 financial year. And this is probably the last of the waiting period of sorts, whether it's paints, whether it's those accessories or those bathroom accessories and stuff like that. And I can tell you one thing for sure, that start focusing on looking at businesses that benefit from this Jal, Har Nal Jal, or whatever that Jal mission is. There is going to be a huge move towards that as we get closer to the next round of general election in terms of results also being accrued. So I think companies that are supplying anything around that are tremendously going to benefit in terms of order visibility and execution. So that's another pocket that is looking very promising from what I've heard and the channel checks that you do with what's kind of working for these companies like Astral and some of the other pipe manufacturers.
Stay on, Prakash. Let's quickly take stock of the auto sector. Sales for the month of August have been a mixed bag. Sonia is standing by and she's going to walk us through the big trends, the analysis that we had, and stand out from the month gone by.
Well, the auto sales for August are out, as you said, and there are some really interesting trends that I've observed. Now, the first big trend I noticed is that commercial vehicle sector growth rate has slowed down sharply compared to what we've seen in the previous months. Now, this could be due to the base effect wearing off. It could also be because of the monsoons, but growth has slowed down to low single digits. Take a look at all the three commercial vehicle players. Tata Motors has barely seen a 6% year-on-year growth this time, in CV sales that is, while Eicher Motors has not even made it to 5% growth, and Leyland saw a 51% year-on-year growth, but that is on the back of a lower base. Now, the next big trend that I noticed is that there is a sharp fall in two-wheeler exports in August. Bajaj Auto saw a 28% year-on-year fall in exports because of Nigeria restricting two-wheeler movement. Remember, Nigeria retails were down 25 to 30% for Bajaj Auto, and Bajaj Auto gets 20% of their export volumes from Nigeria. But Bajaj is not alone. It was down 28%, while Hero MotoCorp saw a 48% fall and TVS Motors saw a 15% year-on-year fall. The third and final trend that I noticed is cracker demand for the passenger vehicle sector. Could be because of new launches, the supply side situation easing, and a robust order backlog which aided the passenger vehicle space. So let's take a look at the numbers. Look at this. Maruti's domestic passenger vehicle sales were up 30% year on year. The pick of the pack really was M&M on the back of a solid 87% year-on-year growth in sales, while Tata Motors was not too far behind. Passenger vehicle sales rose 68% year-on-year, and it's seen a big jump in electric vehicle sales. They were pretty electrifying at 276% year-on-year growth, coming in at 3,845 units, purely because of the sale of the Tata Nexon. So those were the big trends that we identified in the month of August.
Sonia, thank you very much for that. Now, time for excerpts from our chats with managements this morning. So this is Aisha's commercial vehicle business head that we spoke with. We also had the managements of Bajaj Auto and Maruti speak to us about what they've seen and a little bit in terms of what the outlook is looking like. Listen in.
The month of August, there is also impact of monsoons. So I think it's that. Otherwise, CV industry per se is doing very well, and we are expecting good growth overall for the year. If you look at first 5 months, we have sold 28,500, and which is 91% growth over previous year's first 5 months. And if you look at the industry has grown by 88%. So we are doing better than the industry.
Decline in numbers which you're seeing in export sales is not really the outcome of Egypt. If you may recall, we had said that there are developments in Nigeria and a few other parts of Africa, but particularly Nigeria, where retails have slid downwards for two reasons. One is, of course, there is inflation and lower availability of dollars, but there is also an uncertainty due to certain pronouncements by the government of India, government of Nigeria, restricting the movement of motorcycles.
Not really. If you see the first 5 months, the total exports been 111,000 against 87,000 last year. So that's actually a pretty strong growth. Last month, 21,500 against 20,600 of the previous year. I would say the base is pretty strong. For last year was the highest ever exports from Maruti Suzuki. In fact, we ended up being #1 exporter for passenger vehicles with 238,000 units. And we expect the exports to be in the same range, slightly higher than last year. We haven't really seen an impact of the global economic scenario so far. Maybe the effect can probably be seen with a lag. So I'm not sure about that, though. At the moment, it looks as if we are going in pretty strong, even compared with the last year's strong numbers.
Okay, the market's turning volatile once again, by the way. Just look at the Nifty. It's almost back in the red. When we started the show, it looked like the market was building a nice gain and could actually head into the closing bell with some decent gains. I think the Nifty was up 60 points when we started closing bell. Gains are down to just about 7 points now. The mid-cap index today actually has sort of underperformed. It's already slipped in the red. And advanced decline, that line is about to crisscross on that. And there are a couple of stocks which stand out for some bit of weakness. Reliance clearly has been the weakest point for the market. Today also, that's the one stock which is dragging markets quite a bit. In fact, the biggest drag on the market is because of Reliance. And once again, this entire last bit of fall is because of this decline that you're seeing in Reliance. On the index contributing 16 points on the way down. Prakash, what is the market thinking about in terms of this kind of move on Reliance? Because every time it's attempting a rally, there's some heavy-duty selling which comes in.
So, Anuj, I think if you look at post the Monday announcements as part of the AGM, probably people expected too much of specifics, which is in a way not also very proper, because you don't have an AGM as a forum to talk about granular details. But the motherhood statements that came through, the long-range plans that the companies shared or the management has shared, I mean, everything is very promising. It's just that, it's going to be a while before some of these start unfolding, whether it's, the move into the FMCG side or whether it's, a demerger or a carve out of some of the businesses. So those timelines are missing. People also, sounded disappointed that there was no mention of a phone along with Google that's been. I mean, that's not something which you may have on an AGM necessarily, right? So I think it's a mismatch on expectations. That's probably some of the people who anticipated some crackers of announcements in the AGM probably bought into it and are unwinding those positions. That's what I can make out from the screen. But the long-term investment thesis, in fact, it just got stronger. So I'm sure at lower levels, it will find takers. The institutional money will continue to kind of build in. You'll probably have to wait for all the weak hands to get out, is my guess. And today is probably the last day of this week when that would happen, and then next week onwards things could be very different. So that's how I would explain, because there's nothing fundamentally that's disturbing except for that news on a hike in the taxation for some of the export products, but that's minor. I don't think that could fuel such a negativity on the stock yet.
Okay, that's Reliance for you. Stock is down 3% this week. Get into a short break. Prakash, do stay on. On the other side, we'll do a deep dive into the discussion on markets, the way forward with BNP Paribas, Abhiram Eleswarapu on the other side. Stay tuned.
Well, the market is in the red once again. I mean, I think the dip emerged some time back, and it's given up those 60 points that we started the show with at 2:30 and 17,541. I mean, extremely volatile through the course of the day. And if this goes in one direction, I mean, the downside a little bit more, it basically will wipe out whatever little we had for the week as well. So we'll see. There's still 40 minutes to go, and that's a lot of time for a lot to happen. Now, the latest Nifty rejig, which comes into effect on the 30th of September, will see Adani Enterprises enter the index. Shree Cements will make its way out. Mangalam is here to give us more details in terms of what this could mean in terms of flows, etc. Mangalam, over to you.
That's correct. So come September 30th, we will have a change in the Nifty. Adani Enterprises will make its way in, and making way for Adani Enterprises will be Shree Cements. These changes, are in line with what the street was expecting, and barring today's move, which would take Adani's gains to almost 95% this year so far, the stock has rallied almost 90%, whereas Shree Cement, on the other hand, has corrected about 20-25%, including today's decline as well. But X of today is down about 21% So what this means is, from now to September 29th, a lot of the passive funds are likely to, rejig their positions as well in these stocks. So they will be buying Adani Enterprises while selling their holdings in Shree Cement. And to that extent, almost $300 million worth inflows are expected in Adani Enterprises, whereas almost $100 million worth outflows are expected from Shree Cement itself. Importantly, it's also crucial to know that Adani Enterprises will be the second Adani Group stock in the Nifty after the Adani Ports, and with Shree Cement's exit, the sole pure play cement stock on the Nifty will be Ultratech Cement. Of course, Grasim is also a part of the Nifty, but it holds a stake in Ultratech. So by virtue of that, we have about 1.5 stocks in the Nifty, which will be from the cement pack.
Mangalam, thank you very much for that. Shree Cement has been the underperformer in the cement packs. Year to date, Shree Cement is down 21-22%, as Mangalam highlighted. Compare that with Ultratech Cement, which is down 12%, while ACC and Ambuja have actually clocked in gains for on a year-to-date basis. So will this exit from the Nifty put further pressure on Shree Cement? That remains to be seen. Prakash, your thoughts on Adani Enterprises as well as Shree Cement?
So let me take that Shree Cement first. It's kind of simple. I think these are opportunities to buy into some of these classic names, which otherwise you always tend to find very expensive. Of course, not just from an absolute price perspective that it's a 5-digit stock, but it's more to do with the valuation. Shree has always traded at premium valuations given its quality of governance and the kind of capital allocation that it has always followed. But this today's fall because of this shift out of the Nifty is probably an opportunity for people who would want to allocate some money. Importantly, you'll have to see how quickly their expansion starts converting into sales realization, because that gap could probably be a bit longish, and that's why people are willing to look at other more actively active businesses which already have something working for them, rather than Sri, which is in the throes of a little bit of that expansionary mode. So that's the way. Adani Enterprises, I'm not surprised given the way the market cap had grown. It was bound to happen. But remember, it's right now just about 1% plus of the Nifty. So it'll probably also see some ETF money which will continue to come into it. Along with this shift in allocation, and it's kind of upset the Nifty balance in terms of for some of the index funds in terms of tracking error, and also that will take some time to adjust. But on a standalone basis, I think it has too many moving parts to be very accurate in terms of judging and analyzing it. I would still find Adani Ports to be a better investment if I had to write that strength in the group as a whole. Rather than Adani Enterprises, which is fairly complex and always gets expensive with every passing day.
Absolutely. There was, I think there was an article which said that 7 Adani stocks are responsible for 80% of the overall market cap, India's market cap gains this year. 7 names. So just incredible what it's done for, of course, individual stocks, but for the broader markets as well. And of course, now it's part of the Nifty, Adani Enterprises, that is. Now, GMR Infra is the other one, which has got news flow. It was buzzing earlier as well. The company signed a deal with Aboitiz Infra. What would this mean? How large is the deal? And the implications. Vahishta is here with more details. Vahishta.
Hi, thanks for that, Prashant. Well, you're right in saying GMR Airports has signed a deal with Aboitiz Infra Capital for divestment of stake in Mactan Cebu Airport at Philippines. Now, this deal is going to be a part of their airports business, which is their core assets. Now, from this deal, there shall be 9.4 billion Philippine peso, which is equivalent to approximately 13.3 billion rupees, in lieu of the shares being transferred and notes being issued. GMR Infra would also be entitled to additional deferred consideration, which will be earnouts for the next 4 years up to December 2026. Additionally, GMR Power and Urban Infra had divested 30% stake in PTGEMS. This news was maybe about 3 days back, which is engaged in coal mining in Indonesia. Now, this is a part of their non-core business. There is also a possibility of GMR divesting more of their non-core assets. Probably, let's wait and watch.
And there is that board meeting as well, right, Vahishta, where they will consider a fundraise of close to about 6,000 crore rupees to perhaps repay that mounting debt of nearly 24,000 crore. Prakash, do you like GMR Infra?
So, I honestly, probably, there's a very strong FOMO most people will have. If you look at the screen, how both these stocks have behaved in the last couple of months, because clearly, there's repair underway. They're trying to make sure that the balance sheet gets repaired, that they've actually been able to do this divestment from the non-core asset, which was a long time pending of sorts. So, there is a lot of positive this thing around it, but the debt is still fairly daunting, as you mentioned, Rima. So if that were to continue to be high, any kind of a fundraise would end up being very difficult to service beyond a point. So, you will have to see some of the revenues start really effectively being utilized to do that, to reduce the leverage. And once that happens, it becomes leaner, gets more focused onto singularly on these businesses, those separately. Then you would probably have a look at it from a longer term perspective. But yes, it's definitely looking very different from what it did, let's say 6-12 months back as a setup. And there were lots of issues around it, which seem to are getting resolved as we hear these announcements. But give it some time is what I would believe from the history of what these companies have done.
Okay, Prakash, thank you very much. Great speaking with you. Appreciate you joining in with that perspective, and have a good weekend. We'll see you back next week. Abhiram Eliswarupu of BNP Paribas is joining us now to take some questions. Abhiram, good to have you with us here. Thank you very much. Markets directionally, one way or the other, do you have a strong view, or, go with the flow?
Well, I think that the narrative right now has changed globally from, peaking inflation to the fears that inflation that we have today will remain uncomfortably high for a long period of time. On the other hand, we've not seen major earnings cuts anywhere, even in the US or in India. So I think the whole story then revolves around how inflation stays where it stays, whether it falls from here and so on. So therefore, it's really the key monitorable from here on. Now, if you juxtapose that with where valuations are, in India, it's above 19 times 1 year forward earnings, which I would think would be quite expensive given the current scenario of inflation and potentially some fall in demand. So if at all I had a strongish view, it is that in the near term, the markets do look expensive.
Okay, markets at 19 times forward multiple looks expensive. Abhiram, afternoon, Rima here. So when you push the India story with your clients with various buy ideas, what is the response? How comfortable are they with the valuations? Because we've started seeing FIIs nibble in the cash market.
Rima, we are overweight India on the Asia ex-Japan portfolio. And I think investors are beginning to appreciate the fact that while even developed markets are unable to deal with inflation, India has actually got a good handle of it, and that we're in a position to ward off inflation better than most other countries. At the same time, while we have seen some earnings cuts, it's not really been within the Nifty. Most of it has been outside the Nifty. So I think investors do appreciate that. But having said that, they also do acknowledge that that India has outperformed quite significantly. I mean, we're a market that's actually up a little bit year to date, and compare that with, let's say, the S&P 500, which is down between 15 to 20%. Most emerging markets are down 20%. And in that context, therefore, there is always a question of where valuations are. And I think that is the predominant fear in investors' minds today.
I mean, the money is there, but yeah, agree with you. Valuations perhaps are at 20, maybe 15%, 20% lower. There would be a wave of money, right? That's at least the feedback that I got speaking with a bunch of foreign investors. Abhiram, your thoughts on sectors like banking, which have seen some traction coming back. July credit growth numbers have been pretty strong. HDFC Bank, ICICI, I mean the top tier ones are back in rotation.
Yeah, we do like banks, and especially the banks that have high CASA. We think that in an environment where banks themselves become more risk averse to which segments they're going to lend to, you will see that that the larger banks that have high CASA may have a winner-take-all dynamic that may favor them. But just before getting into the show, I was looking at which banks have done well and so on and so forth. And I find that even within the tier one banks, there's been a big divergence in performance, with a couple of banks doing really well year to date and some of them not really so much. So I do think that some of the focus will come back to those banks which have underperformed year to date relative to their peers. And I think there is still value in banking as a whole. If you look at banking compared to most other sectors in India today, a combination of valuations and earnings dynamic is probably the most positive across sectors.
And is there value in the IT stocks? The Nifty IT is down nearly 30% since the start of the year.
Yeah, in fact, given the view that I laid out to you about the markets as a whole, I think that some money will start to move towards the classic defensives. And IT and healthcare have actually underperformed significantly year to date. In fact, the worst performing stocks in the Nifty or in the BSE 200 seem to be from this space. And if you take a look at it from a fundamental perspective, everyone seems to be worried about demand. But if you track deal flows and so on, you'll see that actually there's not really been a collapse of any sort. In fact, order books are still quite decent. And it looks like most companies are talking about their margins having bottomed. And so from here on, there could be a case to overweight IT. And even in healthcare, if you see some companies in this quarter gone by also reported positive surprise on the US side, which I think nobody was expecting. And so therefore, I think I would be quite keenly watching both IT and healthcare from here on.
Okay, Abhiram, good afternoon. The space which has done well is consumption. And it's almost back to the kind of rally that we used to see 3 or 4 years back in the consumption names, both discretionary and non-discretionary. Your views?
On discretionary, I mean, if you split it into various parts, first is autos have had a significant run year to date. I mean, we still like them from a long-term perspective, but I will be surprised if they continue to rally at this pace going forward, simply just based on how far they've gone up year to date. I think the fundamental drivers are still there. Commodity prices are coming down, demand is still holding up, but it's just the fact that valuations are probably not as attractive anymore. If you go down to other parts of discretionary, like white goods, for example, I think there will still be some margin pressure because while input costs may fall, competitive pressures are extremely high there. You will still have a couple of companies that will probably gain market share, having already passed on the cost increases to customers. And lastly, on FMCG, I think the space as a whole is a little bit lackluster, but that said, there's a fundamental tailwind, which is that demand is still quite okay, and input costs will start to come down. Many companies have already taken price hikes, and so they probably may have the benefit of that at the margin level going forward. So if you take, let's say, a 2 to 3 year view, you may have a scenario where revenue growth may be only 10% but you may have earnings growth that could be mid-teens or even higher. So some pockets of FMCG look good, especially where commodity prices or input prices will come down.
Which are the sectors, themes that you would completely avoid at this juncture, given the uncertain macro or the high valuations?
I mean, at this point, I'm just looking, I think the market's been really efficient in pricing in all of the stories that we've been talking about in the past few minutes. But in the very near term, just going to be quite defensive here. Go for IT and healthcare as immediate near-term kind of picks. But from a longer-term perspective, of course, we still like autos and consumption and those kind of themes. But in the near term, I'd be very careful of those areas, especially consumer discretionary.
All right, Abhidham, we'll leave it there. Thank you very much. Appreciate you joining in with that perspective. Thanks indeed for taking out the time. The market's doing nothing. It's down 9 points, 10 points. But that also means that from 2:30, when we started the show, it's down 70 points clean. I mean, so this is, a market which is not being able to sustain some of these gains at this point in time. We'll take a quick break here. On the other side, we'll get you buy today, sell tomorrow calls, short-term technical trading ideas. Mitesh, of course, joins in for that in just a bit.
It's a matter of time before the order starts pouring in for these companies.
Okay, fair point. Now, just looking at some more names, ITC is a stock which is doing well once again. Any views here, Sudeep? After the big rally, it's almost been non-stop. The market might be going anywhere, but ITC just keeps moving higher.
Well, Anuj, I think it was beaten down for such a long time. I think time for ITC has come. People are moving money from many other FMCG where the valuation, the PE multiples are looking obscene. And, ITC is getting the benefit of that because even now on a peer comparison basis, it's significantly undervalued on a peer comparison basis. So ITC is getting the benefit of that. A lot of buying is coming in. The fact also remains that the core business tobacco is doing well. There is volume growth, which is back after many, many years. Last few quarters, they demonstrated that. And if the tobacco volume keeps going up, I think there is nothing stopping ITC. Having said that, must also say that there is a congregation of a lot of these positives as far as ITC is concerned. The paper board industry is doing well. We know all the paper companies are doing well. The hotels business, all the hotels are doing well. So there is a large hotel business inside ITC that's also doing very well. So I think all the components of ITC has started doing well. Even in the FMCG where they were not doing too well compared to HUL and others, there is a traction back. So ITC, even at current valuation, there is absolutely no problem if somebody has slightly long-term view. And somebody having long-term view can always bet on the fact that someday the segregation of the businesses is going to happen and real value unlock will happen.
Okay, the last 5 minutes, markets made a big move in a sense that what it's done is it's made Sensex for the week 0.02%, and Nifty for the week minus 0.02%. You know, last week ended at 17,558 on the Nifty. We are at 17,553. I think on the Sensex, if you look, the last week's close was at 58,833. We're at 58,849. So, you know, you might think a lot has happened this week, but net, we're going absolutely flat.
We were minus 250 points on Monday, plus 450 on Tuesday, and on Thursday we were minus 217.
Yes.
And today, of course, intraday we've seen so many swings, but by the end of it,
and
nothing.
In between, we missed Tuesday Wednesday when SGX Nifty was actually down 300 points. Imagine if, you know, if in this week we would have also participated like that.
It was a good week to go. If you were a trader, it was a good week if you're just taken off, because you wouldn't have missed anything.
Yeah, but you know, the markets, of course, given you trades on both sides. It's you know, the point we're trying to make here is it's anything but flat. The market obviously for the week is flat, but intraday it's anything but. You know, there's so many individual moves. Even today, the market's made a move. It's been an inside day, though. Of course, yesterday's high and low both have been respected. In fact, if Mitesh is still with us, Mitesh, I just wanted your thoughts on the kind of move that we've seen this week. It's you know, it's so reminiscent of the kind of violence that we had in the market before the last decline. Should bulls get a bit nervous, or would you still sort of maintain that it's a buy on dips market?
Well, I think, you know, when I look at the weekly indicators, I think my belief is that because they are rising and they have not been damaged, I think the chances of buy on dips are significantly higher than, you know, the market kind of turning negative. Of course, if we start breaking this 200 average and the gap area 69.50, I think then, you know, we're looking at a secular sense on the downside. But I think that's not something going to happen. In fact, in the last few days, two big gap downs have been bought, and you've seen immediate throwback on the upside. Though, as I said, I think, you know, we are not ready for an uptrend as yet. I think there is clearly demand at lower levels, and I think that's also, you know, the screen reading is also helping out, apart from the fact that the weekly indicators are very positive.
Okay, let's slip into a very short break. For the week, while the index may be absolutely flat, Hindalco has been a big loser, so that's down 5.5%. Infosys, Reliance Industries, ONGC, these are the other three big losers in terms of the large caps. And on the gaining side, Bajaj, Finserv, as well as Finance. Finserv is up close to about 6.5%. ITC, Asian Paints, Titan. So the consumption pack, the FMCG pack, consumer names have shown you gains of close to about 3.5%. Get into a break. We'll come back with the last 11 minutes of this week's trading action. Welcome back. Still in conversation with our experts, and we've just got a few minutes before we wrap up the week's trading action. Sudeep, is it time to look at the Adani Group stocks? Now, usually the confidence has been limited to Adani Ports, and people have not ventured into the other stocks like Adani Transmission or Adani Enterprises. But is it time now to look at, you know, at the Adani Group stocks outside of ports?
Rima, ports always has been a favorite, and it still continues. And if you look at the appreciation of Adani Group stocks, the least appreciation is in ports this year. So ports definitely remains a favorite for a long-term investor. The other Adani Group stock I'd like to flag off for a long-term investor is Adani Wilmar. It's in a great business, and you know, the scope for this business is growing, expanding. They will eventually become a full-fledged FMCG company with the kind of distribution network through Fortune they have created. Definitely can be better utilized by adding more products which can go through the same channel, and I'm sure they're going to do it it's a matter of time. It's a well-managed company. The price appreciation compared to other Adani Group stocks also has been not to that extent. Of course, it got listed only recently. So overall, I think I'm confident on these two Adani Group stocks, Adani Port as well as Adani Wilmar, from a long-term point of view. Other stocks have their merits and demerits, but the fact remains that the valuation looks really full at this stage. So I don't think I will like to recommend or venture into any of the other Adani Group stocks at this stage.
Okay, all right. Would not like to venture into other group names, but Adani Wilmar, of course, is an exception that Sudeep is making at this point in time. The market doing nothing. I mean, it's down just about, 5 points or so. But, the broader market, small caps, right? I mean, it's just a party out there. The kind of moves that we are seeing, I mentioned Shakti Pumps earlier. You look at something like a chemical company called Sri Pushkar. I mean, that is up about 8-9%. Big gains. And so many others, which are TCNS brands, will come up on your screen. It's up about 13%. And these are not talked about that much, but they are actually doing quite well. V-Guard is another one which we don't talk about that much. 7.5% higher. Decent volumes, by the way. Taj GVK, we talk about Indian hotels all the time, but Taj GVK is from 150, 160 levels a few days back to about 180, 182 odd levels now, and so on and so forth. So lots of names in the broader space. I mean, actually, the Indian small cap space by most time frames perhaps has been the best asset class to be in. I mean, it's beaten global indices, etc. Hands down. Absolutely stunning kind of moves as far as this particular space is concerned. Any ideas, Sudeep, you want to sort of put out for our viewers from that space, smaller companies, lesser tracked, but where you think business model is solid, valuations are reasonable? Anything comes to your mind?
Well, I think some of these stocks in the BFSI space comes to my mind. One is definitely IDFC First Bank. I think it has done what it needed to do, cleaned up the old IDFC book. All the parameters now look good, and it has got a strong management. So IDFC First Bank definitely is in our radar. Few other stocks in multiple sectors we are looking at, but nothing to touch at this stage because, as you rightly said, the prices have suddenly shot up quite a bit.
Sudeep, thanks a lot for joining us. Have a good evening and good weekend, of course. The market, let's start, wrapping up for the day. And in fact, it was quite an interesting day for the Nifty, quite an interesting week as well. I think the adjusted closing would mean that the Nifty for the week was absolutely flat, and so was the case with the Sensex as well. The mid-cap index, though, ended with some gains, about 0.8%, and the Bank Nifty gained by about 1.1%. So individual stocks, of course, did quite well, but on the Nifty, we were absolutely flat. In terms of today's movers, ITC was your top contributor, up 2% on that. Adani Ports did well. Larsen & Toubro, HDFC Twins were higher. Kotak Mahindra Bank was up about 1%. NTPC, SBI, Axis Bank, Apollo Hospitals, Eicher Motors, Tech Mahindra, Mahindra & Mahindra, Grasim and Bajaj Finance were some of your other gainers. On the losing end, you had BPCL, which was down about 3%. Shree Cement, which is being thrown out of the Nifty, was down 2.5%. Hindalco was down 2%. Hero MotoCorp down 2%. Reliance dragged markets quite a bit. Maruti Suzuki, Bajaj Auto, Tata Steel, these were few stocks. Infosys, Tata Consumer, few stocks where we saw some bit of decline in today's trade. But overall, as I said, the jury is still out because for the Nifty, we are ending right where we started the week. Let's see what next week brings for us. Of course, Monday, US market is closed. But Prashant, Rima, what about the broader market?
Broader market is just fine, Anuj. I mean, overall advanced decline actually is in favor of declines, mind you. So I'm not saying that, some crazy advances to decline ratio, but 1,200 so declines outnumbered advances by some 200 names. Just a couple of broader market names which went up on significant volumes. So TTML, I mean, I don't know what the move is about, but it's done 40% this week, 42% this week. Today it was up another 5%. Reliance Power was up 5%, 21%. Astral was up 6%. We spoke about this earlier. India Mart was up 6%. HBL Power sort of goes home with that order and a 11% gain today. Action Construction is something we referred to earlier, 9%. EIH Hotel was up 20%. Taj GVK I mentioned earlier. GMM Pfaudler 10% higher. Patanjali about 5% in the green. Varroc Engineering about 7%. PNB Housing about 5%. Anantraj, JK Tire, so many names. TCNS brands I mentioned earlier, and so on and so forth. So some of the stuff with some of the largest volumes is what I've just read out. Rima.
Well, a couple of these auto names as well, where the numbers look good, have ending with at a fresh 52-week high. So whether it's Escorts or Ashok Leyland, strong gains coming through. Pidilite has been another big mover this entire week with a gain of close to about 7%. Hotel stocks are active ahead of the weekend. Indian Hotel, EIH, Taj, GVK, across the board, you've seen some big moves coming through in these names. On the losing side, oil marketing companies, HPCL, BPCL were down 3%. You had cuts in SAIL, SRF, Biocon. Biocon was down 4% this week. Jubilant FoodWorks saw a bit of a nick. So Jubilant FoodWorks was down close to about 2% as the pack fertilizer was under pressure. Tata Chemicals, Chambal Fertilizer and Coromandel International ending with cuts of close to about 2 to 3%. We wrap up the week absolutely flat on the Nifty and the Sensex, the day as well as the week. The mid-caps have ended the day with a cut of close to about 0.5%, but for the week, it's still up close to about 0.8%. But we've got an important jobs data that the markets will be tracking, which we will react to in Monday's trade. With that, it's curtains down in this edition of Closing Bell and a wrap on this week. But don't go anywhere in our Friday special, Smart Money. Our broader markets, the arena of investment opportunity, we'll discuss it with a lineup of our experts.